Good morning and welcome to the Lightcast Studios for this live analysis of the employment situation, also known as the Monthly Jobs Report, a Bureau of Labor Statistics report that gives us some indication into the health of our economy. On this April 7th, 2023, I'm your host, Christopher Laney, and I am joined by a dynamic duo of knowledge. We got Chief Labor Economist, Bloody Teska, and Senior Labor Economist, Rusha Van Kudre. Rusha and Bloody, welcome to the studio.
Good morning.
I think I was stumbling a little bit. It's so early in the morning here on the West Coast, but I am so excited to get into this report with you. Bloody, I'm going to start with you. Most economists believe we were going to sit somewhere between 200 and 300,000 jobs added. We ended up doing that. I wanted to get your first take, your thoughts. Is this what you predicted? And what does this mean to our economy?
I mean, I think overall it was a report that, was pretty much on target, especially when it comes to, the increase in labor. But it had also a lot of sort of positive notes. I mean, for sure, it was, nothing unexpected like a lot of other previous reports where we had like these huge increases. So in terms of the, employment levels, those were pretty much what we expected. Anything below 200K jobs would have been very concerning. So I think, the fact that we got what we expect was a good thing. But we had some positive notes on the unemployment rate. Like, again, we've been hearing about all of these layoffs for the past, I would say, 6 months or so, and we are not seeing those in the unemployment rate. And that means that a lot of these people that are being laid off, they are finding jobs, right? And then we're seeing those on the hiring rate, we're seeing on other numbers as well. But it is, relief that we can see that in the unemployment rate as well, which in this case ticked down. So overall, I think it was a on target report with positive notes. There's other interesting thing there, but I'm going to let Rusha also talk about some of those.
Well, Rusha, it felt like after this week's JOLTS report, where job openings finally fell under 10 million, first time in a year and a half, it felt like all eyes were on this report about this. The cooling that we were looking for is finally taking play. Is that what you're seeing? And what was your expectations in this report? And how do you feel about it?
Yeah, I think this was a great report in terms of seeing exactly what we were hoping for. You're right that, we saw that big drop in JOLTS. And I think it had some people worried. It's important to keep in mind, being close even at the 9 million is still a very, very high number of openings, but it was showing, this cooling off. And so I think everyone's concerns were what we want is the very gradual cooling. So as Bloody said, we had been under 200,000 jobs. If unemployment had shot up, then I think that's when we start worrying about, could something have gone wrong? Are we really missing that soft landing? But this is really what we were looking for, right? We're still adding jobs, but at a much slower rate than we have been in the past year. And everything is really moving in the right direction. So I think this is a great report for the Fed. And, yes, boring in the sense that it's what everyone wanted. But I think where we are right now, sort of in our economic situation, boring is good news.
Yeah, and Bloody, you kind of alluded to this a minute ago, but we're still bombarded by like daily headlines about the tech sector and how a lot of the layoffs are occurring in that sector. Approximately about 50% of recent layoffs have fallen into that sector. Are you seeing that narrative play out in this report that the tech sector is just draining employees?
Absolutely not. I mean, yeah, at least it doesn't show here. Again, that doesn't mean that the tech sector is not laying off people. I mean, what it's showing is that the tech sector, is not just the large companies that we're seeing in the news, and it's also showing that a lot of the other companies in the tech sector are hiring people. And essentially professional business services and information, which is the majority of tech sector, they actually added jobs in this report. So I would say no, this report is not consistent with sort of the narrative that we are in sort of a doom and gloom period, especially when it comes to tech. I think things look good. I mean, so in terms of industries, that was definitely one that we're looking. Finance had a little bit sort of a very small decrease, but I would call it more stable. Again, there was another sector that we're looking, especially with what had happened the previous month with SVB. But again, looking at just like these two main sectors that have been in the news for the past month or so, we are not seeing anything concerning that.
Rusha, staying on the specific industry data for just a second, it felt like most industries either added jobs or were relatively unchanged. Is that what you're seeing? Anything that just stuck out to you when it came to the industry data?
So before I get to your question, actually, I want to respond a little bit to what Bloody was saying in terms of, what are we seeing for unemployment and this tech narrative story. And one thing I did want to point out is, so there is a slight increase in unemployment if you look at the occupations, especially if you're comparing to last year. If you look at sort of these engineering, computer occupations, um, and so when people say that there are layoffs, it's true. I think the important thing to keep in mind there is that the rates for those groups are so low overall, right? If you think, the average unemployment rate is 3.5%, right? But in those industries, or in those occupations rather, it tends to be, somewhere closer to like generally 2%, which is a very low number. And so in general, we are seeing sort of slight increases, maybe from where we were a year ago at like 1.6%, up to maybe 1.8%, but that's really a very small increase. So it's to say, the news is right in that these layoffs are happening. You can see them showing up in the data, but that doesn't mean it's necessarily a huge problem to the extent that everyone thinks it is. In terms of other industries, I would say, yeah, this was, the main place we saw jobs added here was in leisure and hospitality, added about 72,000 jobs, which I think, is good news for that industry. It's been struggling for a long time now. So I think the added jobs there make sense. Healthcare and social assistance added about 51,000 jobs. Interestingly, related to the tech, professional business services did add almost 40,000 jobs, right? So that was one of the big winners. And then the big loser we're sort of seeing here relatively is construction. But I think that sort of follows on trend with, them just not being able to get people in the past few months, and that trend sort of continuing.
Rucha, I want to stay with you for a second. Our team found some interesting data related to the education sector, specifically among private and local education. What did you see in that? What does that mean to our economy?
So I think this is actually a really interesting point that was brought up by one of our other economists. And if you take a look at the employment in those industries, generally, pre-pandemic, it had been increasing slowly but steadily. And then during the pandemic, obviously, huge drop as expected. And then it's slowly been climbing again. But what's interesting is private education has returned and actually surpassed its pre-pandemic levels, while local education is staying far below what it used to be. And I think, this is something that you see reflected in anyone who's a parent sees this, I think, day to day, having to make decisions about private school versus public school. Not that there's this whole other arm thinking about, what are the risks versus, which schools will stay open, right? The government has more of a mandate to close. Sort of, I think people are starting to look more at private schools, particularly the employees, right? Maybe the benefits are better, the pay is better. People are feeling that public education is a tough place to be, and we're seeing that show up in the data.
Bloody, in addition to looking at the jobs added to our economy, one of the other areas is wage gains. And I know some eyes were on that. In this report, did you see any changes in wages specifically, whether positive or negative? And is that, whether it's good or bad, what does that mean to our economy?
I mean, absolutely. That has been one of the main things that, we've been focusing on. And I think the Fed is also focusing on. Again, there's all this narrative about the wage growth essentially being one of the main components of pushing inflation. And, the indication here is that actually that is slowing down. So a year over year had a 4.2 increase in wages, which was, significantly lower than what it was the previous month, which is like 4.6. And this is like the slowest pace since June of 21. So overall, very good news on that front. I mean, but also I think, again, it's sort of like how you see the data. In this case, again, a lot of times we'll do this year over year because it's a little bit easier to interpret. But if you look at just the past months, actually, the wage growth is significantly lower than what this year-over-year number actually says. And so overall, again, it depends how you look at it, but there are good news or even better news, especially on the wage pressure front, depending if you take a more short-term versus longer-term view there.
But I want to stay with you for just a second, because Lightcast data is also showing that employers are starting to pull back from some of those benefits that they were using to try to entice individuals to get jobs with them. Do you believe that employees or job seekers are still in control of the labor market and still have the ability to kind of navigate the labor market the way they want? Or is that control starting to shift back to employers?
I mean, again, these are proxies of trends that are happening in the market. I like to look at the sort of the big picture. And the big picture in this case is that we are still in a very tight labor market. We are still adding jobs, and it's like we see from the JOLTS report, people are still quitting their jobs at rates that are very, very elevated, and actually the increase in this. So if you look at the big picture, that tells me that yes, employees are still sort of in the driving seat, in the sense that there are still a lot of jobs to be filled, and employers are still struggling. So I do think that the narrative, the big picture narrative, is that, irrespective of what you hear from like sort of these micro stories in a way. Yes, the trend is going, but I think we'll probably see a change in narrative, in the more longer run, right? So just because we're there today doesn't mean that in 6 months, for example, the narrative is not going to change. But it takes longer for the narrative to change, that people like look at these month-over-month changes.
Rusha, oftentimes we don't jump into the demographic data as much as we look at it even off the screen. But while unemployment was largely unchanged, there were some pretty significant decreases in unemployment, specifically among Black and Hispanic workers, almost a 0.5%, 1% drop in unemployment. What's your thoughts on that? Is it just because of that tight labor market, we are finally getting those individuals that are either historically not able to get jobs or have been sidelined for whatever reason, or choosing to be sidelined, back into the labor market? What's your thoughts on that?
I actually think it has more to do with the fact that last month was a bit of an anomaly in terms of the unemployment rate for both of those groups. So if you look at those, the unemployment rates there sort of for the past 6 months, they've both been, slowly trending downward, as it has been for the entire economy. And then last month, there was sort of this strange large jump in both, where they jumped back up to sort of the levels they'd been at in the previous few months. And so, I think this going back to where they were is really more of a return to what we were expecting, as opposed to yes, the economy is still very, very tight, as Bloody is saying. I think, last month was just maybe a little bit strange. And I think had people worried that like, oh, things are really loosening up. And this is just showing that, no, they're still very tight.
So
If I can add,
yeah, go ahead.
If I can add one more thing there. Overall, first, that is true. But overall, if you look at, sort of the trends and what has happened in the market, sort of the bigger picture narrative is that a lot of this population, especially the one that have been sort of underrepresented, underserved in the past couple, they have seen the highest wage growth. And so like that is definitely a narrative that exists in the market, especially in the past couple of years. So yes, we can focus on this month to month, but again, the bigger picture is that we are seeing some improvements there.
And similarly, I think if you look at, the industries, the occupations where the unemployment rate is lower, it tends to be sort of these lower skilled occupations as we think of them. And so I think, that sort of lines up very well with what Bloody was saying in terms of, that's where the most wage growth is. That is where we are seeing lower unemployment. That sector of our economy is really growing right now.
Well, for both of you, final thoughts. Bloody, I'll start with you. Final thoughts on this report, and what are you looking for going into the rest of April, especially as the Feds meet at the beginning of May, and they're going to be looking at raising interest once again. What are you looking for over the next few weeks as we prepare for next month?
Well, as I said in some of my statements, that it seems like in the battle of the Fed versus the labor market, especially if you take these past two reports, it seems like the Fed is starting to win. But it's it's starting to win in a nice way, and I think that is important. But it's like the first time that we have an indication that the labor market is starting to bend, right? This is we were waiting for this to happen, and it's happening. But it's happening in a nice way. I think this gives enough justification potentially for the Fed, especially given the sort of the trouble that we've seen in the finance market, to at least for the next meeting potentially stop and hold and see what happens. So I do expect there's a high probability that we'll see no increases in the interest rate in the next meeting. But good news is that at least for now, they seem to be like winning the battle. Now, again, that's a short run. Long run, it might go very wrong. So I think that's an even more incentive them to stop in the next meeting.
Rusha, how about you? Your final thoughts, and what are you looking for over the course of the next few weeks?
I think sort of, as it was mentioned, a lot of people were seeing this report kind of as a tipping point in terms of indication of what's really happening overall. And so I think if you sort of think of it, like as we were approaching this cliff and we're sort of starting to go down it, like you could either, coast down slowly, which is what everyone is hoping for, or, if you get pushed off and like fall to the bottom, then everyone's in trouble. And so I think, this is exactly what we wanted. Things are slowing down at the rate that everyone hoped. And so I think we're just going to keep our eye on that to make sure that, if unemployment goes up, it does go up very slowly. And we sort of, we keep adding jobs to the economy just at a slower rate.
Rusha, Bloody, thank you so much for the conversation and this analysis. For more information about this analysis or any other Lightcast data, you can visit lightcast.io. From the Lightcast studios, I'm Christopher Laney, and we will see you again next month.